Hi, welcome to the Market Alert for Monday, the 25th of November 2019. So Bitcoin prices fall to their lowest since May. So all of the rhetoric the other week about prices moving to the upside has faded and disappeared in all of the news articles to be replaced by this news. But for those that follow the Market Alerts and the 200 bar moving average as a benchmark for whether the market is bullish or bearish, above obviously bullish, below bearish, you will have seen that we've spoken about the market being bearish. And in the daily chart, we've spoken about this since the market took this out several weeks ago, and since then the market has been on a decline, as can be seen by the sell signals in the bigger time frame. The market on Friday took out the 72.98 low, tried to bounce back on Saturday. Sunday the market was then pounded again, and overnight the market has taken out the low that we see here, the 67.36. We will get a bounce off this market. You always get a bounce to the upside, profit taking, dead cat bounce, call it what you like. That is always to be expected as the shorts cover and take profits. But in the weekly chart, the important downside target is the 555.6 area, or the 76% area as well, more or less carrying inside there at 57.13. Market taking out the important 72.98 that we looked at last week. So over the weekend, you can see this is Friday, the market moved lower, and then the volatility kicked into the market with prices trading up to the 50 bar moving average with a couple of buy signals there. Then we had a sell signal below the 20 bar moving average and prices moved lower. We then traded sideways as profit taking came into the market, and then we had one last shakeout there where we see prices being bought back at the support 2 of the market there, and then prices being brought back during the latter part of the session. And then on Saturday the market was fairly quiet, and you can see there the market trading back up to the 200 MA, finding resistance at this level before coming back. And then overnight on Sunday, you can see prices once again moving lower and struggling to break above the 200 MA. I say this is a very important level in all markets. Doesn't matter which market you look at, put a 200 bar moving average on there, because it will pay dividends in establishing whether the market is a long or short. And in combination with the DP level, becomes a very good benchmark. So overnight we've seen prices move lower, just starting to find a bit of support down at the S2. The market goes down to the S3 before moving higher. Watch the level carefully, because you will see some sort of support coming into this market. So just to again reiterate, watch prices in the weekly chart for your targets on the downside, and this is why it's so important to have the bigger time frames in your charts. No matter what market you're looking at, you need to know the background of the market and where prices are trading to actually have any idea of where they're likely to trade to. Meanwhile, in the stock markets, stocks suffer a shocking down week as Fed balance sheet unexpectedly shrinks. Well, I wouldn't call it a shocking down move at all. I mean, it's barely a move on the price chart. So if we look at the daily chart last week, we saw the market move lower on Wednesday. Thursday, the market found support and moved back on Friday, and has gapped higher on the overnight. On what? I don't know. Probably a Trump tweet from the trade talks phase 1 with the Chinese. But the key here is the market moving back up at the moment. Watch for the 28.041 level in the daily chart for the Dow. But also keep in mind that this week is a very slow news week. We've got consumer confidence on Tuesday, and then Chicago PMI, there you go, for Wednesday. Thursday is Thanksgiving. The markets will only trade half a day on Wednesday and Friday of this week, so it's a quiet week. So this leaves the market free to move to the upside this week. And going back to Friday, in the 5-minute chart, the classic pattern: the market opens, trades down to the 200 MA, breaks through, tests, and then you get your retracement, and then we have the moon shoot, assisted by the Federal Reserve, no doubt, with the market moving back to the upside 100 points. And then on Sunday evening, the market opens, gaps higher, and has traded to the upside there. The gap will need to be filled at some point, so this is potential for this morning to move the market to the downside to fill the gap before then resuming the up move, which we can see quite clearly in the daily chart there. So IV, an interesting picture. The market moving lower once more in this, closing back below the 200 MA to 1153, considering the market was down on Friday and then brought back, so the implied volatility still coiling in a bit of a sideways move there, which can be seen quite clearly in this chart, just the one day where the market closed at above the 20 bar moving average, which is in the amber colour there, just as a warning, but the market above the 20 bar moving average there. The 10-year yield is sitting at 0.19, still sideways for this market. And Deutsche Bank, we've not looked at this for a while. As I've said before, I think that the repo market is funding this bank, keeping it afloat, and has been since September the 11th. However, price is back again below the 200 MA in the 60-minute chart there, and trading sideways. Okay, that's it for this one. Like I say, keep in mind this week we've got a holiday week in the US. There's not a lot of news to really move the markets around, so it's free for the Dow to be moved to the upside. Keep an eye on the downside as well in Bitcoin. The volatility is back in that market at the moment as well. I won't speak too soon, but certainly some good moves over the last 3-4 days in this market. Okay, that will do it for this one. If there is anything else to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.